Hello, chart watchers, and welcome to this Friday, April 6th, Market Watchers live show with your hosts, Aaron Swenlin and Greg Schnell, who is in for Tom Bowley this week. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Let's go ahead and take a quick peek at what's going on in the market currently. Everything is down. I think we've figured that one out very, very closely this morning. Having a difficult day in the markets. You can see the Dow, S&P, all of the large cap indexes have fallen, although it looks like we may have set some intraday lows here. You can also see on the NASDAQ where we're getting sort of a rounded bottom here on the intraday chart. So we might be getting ready to come out of this decline. See Russell 2000, small caps getting hit just as hard as the large caps. Wilshire 5000 lower as well. You can see treasury yields have dropped today, currently reading at 27.86. UUP gapped down and is now consolidating mostly sideways, currently reading 23.64. Commodities are lower, probably affected by the fact that USO and oil are down today, but maybe have set an intraday low as well. You can see gold gapped up, has formed a symmetrical triangle. Those are actually continuation patterns, so I would expect to see gold break out a little bit here before the end of the day. The VIX is rising, currently looking at readings right around 20, and that pretty much covers what we've got going on in the markets today. And with that, I'm going to bring in my co-host, Greg, who's been sitting in for Tom Bowley this whole week. It's been absolutely a pleasure to have you.
Good morning, Aaron, and good morning, everybody. Thanks for the opportunity to come in and join you guys. Yeah, we've had quite a week, a little bit of volatility too. So.
Yes, absolutely. I know we've gotten a lot of people interested in what is going on. Just a reminder, we do have a poll running right now, a sentiment poll, asking you whether you think the market will close higher or lower next week or mostly unchanged. There's a neutral vote in there as well. So be sure and go in and take that poll. We'll take a look at that at the end of the show during the sentiment segment that we'll be doing. With that, let's go ahead and take a look at our weekly agenda and schedule as we go forward in the week. We have today is the workshop that we're getting from Greg. And on Monday, welcome back, Tom. Tom will be back on Monday. Tuesday, we will have everything stock charts. And my dad, Carl Swenlin, will be in on Wednesday to join us to probably talk a little bit more about the intermediate and longer terms. And then on Friday, Tom is going to have a workshop. Although it might be me, Zach, I think it's my turn. But, if we want to leave it that way, we can do that. For today's agenda, let's take a peek. We're going to start off with, of course, after our technical news, we'll bring in Greg. He's going to be doing Keltner Channels for his workshop. That'll be followed by the 10 and 10 to 1. And our first symbol will be Meritor, MTOR, if you want to go take a peek at that chart before I do during the 10 and 10. And finally, we'll finish up with the sentiment update. Very interesting sentiment charts out there. And I think you're going to enjoy that segment quite a bit. So stick around for that at the end of the show. And with that, I'm going to turn it over to you, Greg, for some technical news.
Okay. So Aaron's going to do the jobs report in a little bit here. And again, I don't really use the economic indicators. I use charts. So I'm not going to get into those things, but Aaron will. And then, so I'm going to talk a little bit more about what we talked about earlier in the week and then get into some other charts. So first of all, remember I had set up this chart. This is each one of these panels here is a day. And so this is a 10-period chart. These are called elder candles in this color coding: red, blue, green. And what you see here is it's in red, then blue's a change of direction starting, green, blue, red, da 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 da. So you see this change showing up on the chart as an elder candle. But the point I wanted to make is look what the MACD is doing on the S&P 500. So it is now rolling over a little bit just above zero. And what we would expect, obviously, is it to come down around zero and start to bounce off that. That might take later today or Monday. Every Monday for the last couple of weeks, we've had a weak Monday. So we'll see if that trend continues. But the more important thing for us to watch at this point is on the high lows. Actually, I want to show one more thing before I do that. I'm just going to quickly scroll down. None of these charts got through the 100 period moving average yet, and they all tried, but haven't been able to do that. The S&P briefly did, which was nice, but the VIX is starting to try and rise back up. So I'm starting to get worried that the breakout isn't going to happen. And then the other thing is so this is Friday, obviously, Thursday, Wednesday, Tuesday, Monday. So we had to take out the high of the previous week, and it's right up here at 2675. And so if you're using weekly pivots, you would say, okay, well, it's making a higher high this week. The problem is we got stuck trying to make a higher high on the weekly chart. So that's why that inflection point is important. And we spent all day yesterday trying to get through it and couldn't get it done. So that's a little bit of a hurdle for us coming up. And then the same thing on the NASDAQ here, we see this would be Monday. And then this was Thursday, Wednesday, Tuesday. So we never got anywhere near the highs on the NASDAQ. And we did on the Russell. We got right up against them, but couldn't get through them either. So hopefully you get a feel for just why this little 10-minute chart, or sorry, 10-day, 60-minute chart gives you some things to watch for in the market. For the S&P 500, or sorry, for the TSX, we're trying to get back through last Friday's high, and that would have given us pretty much new 2-week highs with the exception of Monday morning. But actually, I think last week was a short week, so this was the Monday. So it had to get through Friday's high, and it couldn't do that. So that was a bit of a problem. Now, natural gas, you can see we're just trading sideways in the range. USO is on a 2-week drift, but we're making new 2-week lows. I mentioned yesterday or the other day when we started to look at the USO chart, and I can just go grab one of those. Should be here on the ticker cloud. And I have the ticker cloud set up to my homepage, so that tells you what a rounded individual I am. Anyway, the MACD was rolling over with a lot lower high. And even though the oil stocks were great performers yesterday, one of the things I'm worried about is there's not a lot of momentum in the price of oil here, and it's very close to going negative on momentum. So that's a concern. Gold is just still trading in the middle of the range. Yesterday, it tried to make new 2-week lows, but was unable to. But you can see all of this week, it didn't get anywhere close to challenging the previous highs. But in the Commodities Countdown article I wrote last night, gold didn't. Gold actually was down 0.5% yesterday, but the gold miners were up 0.5% yesterday. So interesting that they showed strength when gold was, gapping lower. So I think there's still a reason to keep watching the gold stocks. At this point, I don't own any, but I keep watching it very, very closely. It feels to me like a bit of a tinderbox and could light up at any minute. TLT is right in the middle of the range for the last 2 weeks, so nothing really new. It did try to make new 2-week lows yesterday and couldn't do that. And then UUP made 2-week highs yesterday and pulled back slightly to start the day. So there was a request on the chat room there to show how I have these charts set up. And so if you're a pro member, you get 10. If you're an extra member, you get 5 prices that you can put on the chart. So I have my main price, the S&P. So then I've got a price panel here, these 4 price panels, or sorry, 3, and then 5 price panels. And this date and time axis, just to scroll up, gives you this little bar in the middle here. And that's an indicator setting. And we'll put some tips and tricks into the Stock Charts TV, and some of these things will be shown in there. But if you want this date and time axis, it's just a selection in alphabetical order that you could pick out of the bundle and put it in there. Now, I've used ETFs to set up this chart of the different things I want. You could, it's all yours. Whatever you think is important in the market to watch. This is probably one of the few places I have a VIX chart. And other than that, I don't really pay attention to the VIX because I think it just kind of mirrors the S&P, except it goes really extreme really quick. The Elder Impulse System is a chart style, and let me just show it to you up here. So we have all these different chart styles, and it's the last one, and that will give you those red, blue, green candles. And if you go to chart school, there's a whole article written about how that works. So I would strongly encourage you to do that. That is from the book Come Into My Trading Room by Alexander Elder, one of the top selling investment books going. And it's for swing traders. So if you're a swing trader, that book is very important reading. A lot of the ideas I'm discussing here are in my book. So if you want more information on it, you can also look in there. Um, the way you display these bars here, just to show people as the market, I put them in different colors just so that they're discernible, whether they're red, blue, green, all that kind of stuff, or just a solid color. I mean, on a 2-week chart, you're going to see whether it's going up or down quite well. But the main gist of the moment that you're trying to figure out, for me, as you notice, I put these three commodities kind of together, and I live in Calgary, which is a commodity-centric city. We have agriculture, mining, and oil and gas are really prominent here. So I'm focused on this kind of area of the market. So that's on my home screen. If you're a financial, if you like to trade the banks and the technology stocks, maybe you want to put SOX in here, and maybe you want to put, KBE or something like that, or JP Morgan, whatever you want. This is the way I've set it up. But the point I wanted to make to you is you can continually watch the market very quickly by just using the 60-minute chart without being hypersensitive to it. But just starting to notice stuff making 2-week lows and 2-week highs is helpful, just to keep pulse on the market. And so this positive MACD, I think, is important. Now let's just do one thing here and zoom out on the timeline. And I'm sorry for the scrolling, but the point I want to make is when this MACD goes positive, it's an important place. And hopefully what we're looking for now is this bounce off the lows and to continue higher. And again, it might take another day to get through that bounce off the lows. We'll see. All of that added together, I mean, today's jobs number was weak, but last month's was super strong. So, it really, I don't think it's the jobs number that drove today's market behavior. There was a little bit of tweeting overnight that added quite a bit of pressure in the pre-market. And again, I think the market is trying to base here, so maybe it's a head and shoulders basing pattern. But when you get a positive MACD and it pulls back, now what we want to see is that it starts to control the pullback and doesn't pull back too fast and then starts to round back higher. If it does like it did here and just literally break down again, that's obviously a bigger deal. So that's how I use it. The second component I wanted to discuss briefly was this high-low chart, and we had put this up the other day. If we were going to stall, this is kind of the level of high lows that we might expect, that we wouldn't get more than 80 or 100. We'd be up in this range. So we have had a move to the upside here. Even if we get bullish, we can just rattle around sideways, much like we did in here. But I don't think we're going back to this sort of thing at this point in time. And the main reason for that is I just think the market is slowly building a distribution like we talked about on the Wyckoff presentation yesterday. But I think we don't usually make highs like this in the S&P 500. Usually we have a pullback and then we go back and we test the highs. Now, whether that's 2,800 or 2,850 or 2,900, we get back up into that area. And if we can't do it, we'll roll over. If you go back and look in the year 2000, the NASDAQ made a parabolic spike high, but the S&P 500 went back and tested the March highs in September of that year before it finally rolled over. So there was another complete test, but it was almost 6 months later. So those are kind of things that I'm looking for. And I just wanted to follow up because we started this train of thought on Monday and how I use it. And again, if you want any of the chart setup information for this chart, it's pretty simple, but you just put a solid line on here, and then what you're looking for, the horizontal lines, I put them in here just to mark extremes on the chart, and I've got a horizontal line in here for marking kind of the top of the range. Anyway, that's how I do it, and you're more than welcome to set up what you want. But those are just some ideas, hopefully, that will help you review the market from a broader perspective. And with that, I'll hand it over to Aaron.
All right, let's go ahead. I'm going to take you to the economic employment report that we can see here. Let's go. All right. So really what we know at this point is that, March payroll growth was 103,000, and that came in well below the expectations. But from what analysts are saying, they felt that because average hourly earnings are showing some pressure on that, because it came in a bit above what was expected at 0.3% increase in the average hourly earnings. And so they're saying that even though we lost, we had this payroll growth that was lower than expectations, because there is a little bit of increase in those average hourly earnings, it sort of washes it out a little bit. Basically, overall, they're saying that, the labor market wasn't that hot as everybody thought it was in March. And so at this point, they don't think that this employment report is going to really turn up the heat on the Federal Reserve at this point, or really hurt the market too much. I have to believe, like you do, Greg, that a lot of these economic reports are sort of baked in, but I do know that there are, they can affect the market just like the global situation can somewhat. But yes, I don't use it too much in my own analysis. I do find it interesting. So here are downgrades and upgrades. I'll just go over those really quickly with you. First downgrade, I'm going to show you. Let's get this to where we can look at them. Here we go. Let's start with Rio Tinto. This was a downgrade today. What we can see is, it looked like it was basing, looked like we were in a good place for a bounce, and I still think we could bounce here. You can see this is pretty strong support here at about 50. And it also provided a bit of overhead resistance at the time as well. So it's one of those things, if it's going to, this is the place to get in. I think that this wouldn't be a bad setup because you do have that $50 support level, and there's a lot of upside potential here. The PMO has been flat, and it is turning down today, but that is, of course, due to an almost 1.5% drop currently. Our other downgrade today, XLNX. And, this one it's a downgrade, and we're seeing that breakdown below the 200-day EMA. Pretty ugly as far as the PMO is concerned, moving into negative territory, scooters dropping off the map. This is a downgrade where I wouldn't be looking to find a bargain here. This one just doesn't look very strong. Avalon Bay Communities was an upgrade today. And we can see that we've got the PMO buy signal. We're now seeing PMO readings into the positive territory. OBV is looking pretty good at this point with this move upward. But I'd have to say, looking in the thumbnail and seeing that decrease in volume as prices have been going up, that would concern me somewhat. But we did break up above this overhead resistance at about 165. It is an upgrade, so I think there is some potential here. Look at that 20-50-day EMA. It's almost ready for that crossover to give us an intermediate term trend model buy signal. Finally, on our final upgrade today, Valeant Pharmaceuticals. I thought this one looked interesting. I know we always say that. That's an interesting chart. I say interesting because we have this area of support that we're sitting on right now, trying to make a move above. If you do look in the thumbnail, you can see that we have broken a very short-term declining tops trend line. We popped up above that, but we are trading lower and below it. So I think this one is in an interesting area. Again, you could set a tight stop here and still have some upside potential, from at least, look at that $17 level here where we had previous support in February. So could be interesting. And that is what I have for upgrades and downgrades. I do want to give you a real quick update. Carl just sent me via email, and that is XLU, the utilities sector. We just got an intermediate term trend model buy signal here, and you can see very nice PMO. We've been seeing some good momentum in utilities. I can see a reverse head and shoulders that's possibly set up here, and we're getting the breakout yesterday and today. So I think that's really interesting. Again, seeing a somewhat defensive sector showing some strength right now is certainly somewhat concerning, at least to me. And with that, I'm going to pass it back to you, Greg, so you can get started on your wonderful workshop on Keltner channels. Of course, we have to. There we go. You need to unmute yourself because we can't hear you.
Thank you. I turned it off while you're talking so I don't make any noise in the background.
Oh,
Appreciate the heads up. Okay, so first of all, a couple of things. One is that there's predefined scans in the chart school. So I'm in chart school here, and one of the options is predefined scans. And if with that, you can see one of the areas that's in here is Keltner channel information. And so I would encourage you to go look at that. The second component, there's a whole article well written by Arthur Hill on Keltner channels. And Arthur has done an unbelievable job of going through a whole bunch of books and data to combine all of this to make us, or to make it very simple to go and investigate each one of these. So Keltner channels were originally created by a guy named Keltner, obviously. And then the second component, Chester Keltner, and his book was How to Make Money in Commodities, and that would compare with the book by William O'Neill, How to Make Money in Stocks. But Linda Raschke came up with a way of updating the Keltner channel, and what she did was she used the average true range to calculate channel width. And stockcharts.com, on our version of Keltner channels, we use that. The average true range. Now, why is that important? It's I'm not going to read the whole article to you or how it's calculated, but I will say you can see here that by changing the ATR, that's the average true range of the move over a time period. So in this case, Arthur shows that over a 10 period time range, it has a wide range, but in a long period time frame, it'll actually be a smaller range. And so you can set the volatility, or the how wild the information is, depending on, you can add more time to kind of smooth it out, much like a 200-day moving average is smoother than a 5-day moving average. Anyway, the point would be that what we're trying to do is pick, in this case, the moving average line in the middle is the 20-period moving average. And then we're setting a spread range around it. And there's a whole bunch of different ways to interpret it. And I'm going to go show you some of mine. But Arthur's written a whole bunch here, and how it compares to Bollinger Bands. Bollinger Bands squeeze a lot more and expand a lot more. You won't see that on a Keltner channel. So again, and just maybe if I should just go over here and grab one of these just any chart. But the point I want to make on the setup down here is that we have a whole bunch of different types of channels. We have a Keltner channel. We have simple moving average envelopes and exponential moving average envelopes, and then we have things like Bollinger Bands. So, and there's price channels as well here. So I would encourage you, if you're interested in the concept of channels, price channels, all of these are set up here, and all you have to do is go into Chart School, and you can read all about them. And then at the bottom of those Chart School articles, Arthur's also written books, or sorry, referenced books that he used when he wrote the articles, and you can go and track it down that way. So this isn't the only way to use Keltner channels. This is my way of using Keltner channels. And I just want to present it as a tool that sits on stock charts, relatively unknown, but really a strong thing. So what we're going to do, maybe I should show you a picture of the Keltner channel first. And I thought I had this all set up, so I'm a little, there we go. So here's the Keltner channel, and I'll just make these lines a little bit stronger. I put them on dotted first, and then I was going to go back and make them solid, and I forgot on this particular set. So I've just made the Keltner channel line solid here, and then I'm going to scroll down and set it up for the whole group. And by hitting that apply style to all, I've done a scan, I've put them in a chart list, and now this sets up every chart in the chart list with this sort of setting. So in this case, I'm using a weekly Keltner channel, and you can change that sensitivity. So I have set this at 1, and you can see with 1, we still get some dips all the way to the bottom. If you set it to 2, it rarely gets there. And what Typically, what you'd like to do is have something uptrending and then get the bounces off the bottom and ride them to the high. So the overall market's been pulling back a little bit now. This particular stock you can see on the full stochastics gives you a dip roughly once a year, and you'd like to participate in those dips. So then when it does pull back, these are nice places to look for entries. So the whole idea behind a Keltner channel, if you're a dividend investor, you want to pick it up while the yield is a little higher based on the price of the stock. Whereas if the stock is breaking out of the top of the range, the yield will be a smaller percentage of your buying price. So then you won't get as big a yield revenue for your investments. So those are different tools that you can use. But in this chart list, and I'm just going to go to view all and just give you some ideas how this works. So I've set it up to 3 years, and you can just see when this starts to come back inside the Keltner channel, that's what we're looking for in this particular scan. And so the same thing here. So right now we're outside the Keltner channel, and when I ran the scan this morning, we were just inside it. But what we'd be hoping for is to catch this pullback and then let it run to the other side of the channel. Now, in this case, the channel is about $12 wide. Depending on the volatility of a stock, it will be wider or narrower because it takes that average true range. And that's why these lines are not a consistent width. It's when the stock all of a sudden starts to run like this, it's going to expand them. And then when the stock trades sideways, it's going to shrink them. So the nice part is it automatically sets the channel width, and we're going to use different channels on different charts here to explain that. So let's get into what the scan would look like. And it, basically country is US. We're looking for stocks. I've picked a simple moving average volume of 40,000. I could have picked 400,000, but I picked a close greater than $10. In order to control your results, you can either change the volume to be 1,000,000 or 400,000 or whatever you'd like, and change the close to be, greater than $5 and under $10 or anything. And if you wanted the close under $10 or under 20, then you would just end close less than 20. It's not very hard, but you just have to use the square brackets. So very simply run this scan, and for the actual Keltner channel, what I've done is the weekly lower Keltner channel is less than today's close. And the setting for that is we're going to base it on the 20-period exponential moving average. We're going to make it 1 ATR. So remember in that chart school article, I showed the 1, the 2, and the 3. Well, we're using weekly here. So we're trying to get pullbacks in an uptrend as opposed to buying stocks that are headed down and buying them at the very bottom while they continue lower. So not looking for that in this particular thing. I haven't set up anything that says the Keltner channel has to be uptrending, but that would be easy to do. Just say, the 20-period moving average is higher than the 20-period moving average was 1 month ago. And last week's lower Keltner channel. So again, the same settings. So last week's, the Keltner channel was higher than the close. So in other words, the close was below the Keltner channel. And then this week, the close is greater than the lower Keltner channel. Again, let's go look at that on a zoomed in version here. So what we're looking for is it was below. Last week it was just below, and then this week it would close back above. And so we're looking for that simple little clue that it's trying to improve. Now, in this case, the Keltner channel is dropping, so maybe it's too late. But sometimes you can get them when they're uptrending and you get a quick pullback. Those are a little nicer, maybe something more like this. So that's a weekly version. Now let's go and look. I'm going to show you the difference in the structure. So here what we've done is we've done a Keltner channel, and we're looking for a breakout to the upside. And again, weekly chart, 3-year period. And what the difference is on the technical scan is we've just changed it to be exactly the opposite. So the upper Keltner channel is now under today's close, and last week's upper Keltner channel was below. I probably should have said last week's close, but it was yesterday's close. So this, I didn't quite program that last area right there, as a matter of fact. So with that, you take those Keltner channels, and it's going to give you some results. And in this case, it only gave me 5, so they're very easy to look through. Let's just make sure I've saved that style to all of these charts. And the idea being, so I've just dumped them in a scan bucket, and for everybody's information on scanning, what you do is you just have a whole bunch of these all set up with any names, and pick a name of a rock band. It could be Rush, could be Dire Straits, could be Willie Nelson, whatever you want. Or you can, George, Paul, Ringo. I did John Murphy, Greg Schnell, Martin Prey. So you get to have some fun and flexibility with naming your scan, but have a whole bunch of scan buckets and just drop stuff into there. So here are these charts, and what you see here is this chart had been oversold deeply, pulled up, came back down, tested the bottom of this middle area, and is now breaking back out the top side. So it looks like, to me, it's trying to trend change. And in Arthur's writing in the Chart School article, what he talks about is it breaks out to the top side and then pulls back, and then you're trying to buy it around this middle and watch it break out again. That is very similar to an Alexander Elder style of investing, and you could have the colored bars and they would work to help you with that. So all of these are different tools, and the way you set them up is your choice. Here you've got a full stochastic starting to cross midway. That's usually a very bullish trait when the full stochastic doesn't go all the way to the bottom of the range. So this is an interesting place to look for a cross and perhaps a turn upside. We'll just quickly flip through some of these. Oh yeah, these other 3 were just, even though I had scanned for stocks only, these 3 ETFs came up for some reason. So they've obviously got a coding issue from the exchange. Okay, the next one I'm going to do is go into a daily Keltner channel scan. And the reason I want to do that, let's just go open up some of these charts. So it comes up with a longer list. And what we want to do here is this is starting to break down and now breaking out to the upside, so much like the Elder look. You can set this up so it's turning to the upside. And as you get these turns, the idea is to try and put these stocks on your watch list and then figure out where you want to enter them. On this one, today's upper Keltner channel is less than yesterday's close. So in other words, the price has moved above the Keltner channel, and yesterday's upper Keltner channel is below yesterday's close. And what I've done here, notice I've made this 0.05. So I've set the bands really narrow. And the idea behind doing that is it's going to give you a ribbon, and this ribbon effect helps you in that what you see is the stock trades to the upside, so you'd buy the breakout, and if it trades down to the lower side of the band, you would sell it. So in this case, obviously that's a losing trade. You bought it here and you're selling it here. Now it trades back up to the upside and breaks all the way through. Your sell point is when it closes below your fly paper or whatever. I learned this from a guy who runs a website called uptrends.com. But when it broke out here, you can see it rode all the way up, and you caught all of this lift by setting this very narrow, and this width of this is your stop level. So in this case, it doesn't break out to the top side. Here it breaks out to the top side, but never closes below. So you would have been on watch here, but it didn't close below, and then turns around and keeps running. And so your entry point is here and your sell point is here. Conversely, here's your stop. This is your sell point down here. When something gets so euphoric for a month, there's probably a clue you might want to take some money off the table. But in a normal uptrending stock, and we could pick some of the better names, but perhaps this one is just breaking out to a new buy signal today after consolidating for 3 or 4 months. Looks pretty good to me. Would be an interesting stock to spend more time looking at. Here's one, American Depository Shares, and you can see it's traded sideways for a couple of months, but it's been above this channel for a while. Here it dipped below, but never closed below. So you can use these Keltner channels just to structure any sort of trade you want. And the one I was on here before, this was just buying a daily chart breakout. But I would actually prefer to use the flypaper version where you set it up narrower rather than keeping the standard settings and just buy the breakout to the upside and then use the downside as a stop. So the purpose of the Keltner channel is not to um, because it auto scales, it helps you define an entry and an exit based on the volatility of that stock or how much that stock likes to change. So if we took this setup and just pick, one of the big movers lately has been in the semiconductor space. And so here you have Micron, and it's basically doing nothing, and it finally starts to break out here. And it's easy in hindsight because I would have bought this one and got stopped out here. But you're trading along here, and then all of a sudden this thing just goes on a beautiful run, 30 or 40%, and then it comes back in. If you wait all the way for this to close down here, it can be expensive. You're giving up quite a bit of gains. But when you see something move 20 or 30% in a couple of weeks, you're going to try and protect some of that capital. So, after it had been on such a run and go sideways, there's a reason to start to look. You can see it starts to underperform the S&P 500. That's one of my favorite sell signals on something that really runs quickly. So taking a combination of these things and overlaying them can really help you use the Keltner channels. What makes Keltner channels so interesting right now is that the market's pulled back 10%. So if you could find something that's breaking out to new 52-week highs, obviously it's going to be above its Keltner channel because the Keltner channel is using a moving average, and now you're ahead of the moving average. But if you can find some things that are starting to break out and then try to find an entry, so in this case here, you're looking, and it might be months before you actually get the setup you want. In this case, this is a stop out, and this case is a buy, and you get to enjoy the ride. We keep talking about NVIDIA, and everybody wants to know about NVIDIA. I think it's been on the watch list every day this week for for stocks to talk about, but it continues to sit under this flypaper channel. And Stephen Whiteside, who runs Uptrend, that's what he calls it, his flypaper channel, whether it sticks to it or not. But the idea is it's not on a buy signal until it can start getting back above the trend. And you could tighten this down and make it a quarter of an ATR width or whatever you prefer. You can set it as tight as you want. But I think it's really nice for people trying to trade that are afraid to put a stop somewhere. And this doesn't put the stop at your buy point, because your buy point is as it goes above the moving average or above the outside of the Keltner channel, but your stop goes at the lower edge of the Keltner channel. So all through here, you're not getting a buy signal, and you finally get one on the breakout here. Now, this is a little bit unfortunate that it gaps up so much, but it goes on a 30-day run that is really, really stunning. And it's those kind of gains that you can help lock in by using these Keltner channels on a really volatile stock, or a high momentum name might be a kinder way to say that. Okay, so hopefully I've explained what a Keltner channel is. Now, one of the things I'd like to do is just compare it to, say, a Bollinger Band, so you can see it on a stock that we're all familiar with. But the Bollinger Band, let's make these lines dark just so that they're more obvious. Green is fine, and then we'll make them very strong. And what you see here is these Bollinger Bands are 2 standard deviations away. Well, we've obviously not tried to get anywhere near that level because we wanted entries in here. And so you can overlay these and use them in tandem. You could use them any way you want to use them. Bouncing off the bottom of the Bollinger, that's one trade, riding it to the other side. There's multiple different ways to do this. The one thing that most people have trouble with is setting stops, and this Keltner channel can help you set stops. So in this case over here, it's running all the way up, and it finally breaks down to the bottom side of this, and you've had a huge run, so you're probably going to you're trying to look for a safe place to take profits, and at least this would be a clue that things are starting to change. So the Bollinger Band is much wider. The signals on the Bollinger Band, of course, like this is $180 to $230. So it's a $50 Bollinger Band. Uh, the first time it touches the other side of the range, that's a lot of money to give back. Now, how you trade it, again, this is high volatility. So when it breaks down below this 20 period moving average, it moved a long way. Both of these would have given you a very low sell signal and a long way from the high. Um, Nothing's a perfect trading system, but I will point out that one of the things you're looking for on a trading system is just something that helps you get in and helps you get out. And what I like about the Keltner channel is you can set it to the volatility you want. So you can do that with Bollinger Bands too, but again, they really shrink and contract a lot. Let's go back to this first one. What you see here on a weekly chart, again, for people who don't want to trade daily or whatever, this is a much better trend to look at. And I've zoomed in here a little bit. But down at the bottom, I have my PPO line here. And in this case, it's starting to break. So I would actually not take this trade because it's not going the right way for me. It's near the top and near the end of the run. And I would probably prefer to take something that the PPO is declining like this, and now I'm starting to get a buy signal to the upside. And then that's the one that I would much rather take with a lot more upside momentum. So it's more difficult, but I want to get it when the PPO is starting to improve, not when the PPO is starting to fade, if that makes any sense. So weekly is a whole different style. Again, you have to have, this move from 58 to $50 in a couple of weeks is going to, well, even in a week is going to scare you a little bit. But for longer term traders, you're going to set the Keltner channels on a weekly chart. For short term traders, you're going to set them on a daily chart. Feel free to go back and read Arthur's setups for how to use some of these trading systems. You can also use them in combination with the full stochastics. And one of the reasons for that is the full stochastics measures the percent where the price is relative to the last period. So in this case, 14 periods, is the price near the high or the low? Well, it's at near the lows within the last 14-week trading range. So the full stochastic is right down at 5 or 10% here. When it turns back up, this is a bullish signal. This is also helping you confirm your signal on a weekly chart as an example. And much like I talked about the S&P 500 on that 60-minute chart, we'd want to see it come down and bounce off zero and head higher. That is a really nice place to buy stocks when you have a momentum line coming down to zero and then kicking off. And I think Tom talks about that almost full time. So those are the more critical components of Keltner channels. There's books written on it, so it's not like I can share it all with you in a few minutes. But I highlighted Keltner channels as a trading idea in my book, so you can go in and see how some of those things are set up. I would encourage you to at least experience with Keltner channels, and understanding channels is a very important point in the stock market, because price does try to move in a range. And so here's one watt. This broke out all the way to the upside. It's pulled back now. There's obviously something that sent that stock surging. The real question is how to get in it. And I think we talked earlier this week, buying those parabolics. I think it was on Intercept Pharmaceuticals. Basically, it's been drifting lower for 3 years. But perhaps you're looking to get something on a deeply oversold level and then try and buy it on the breakout following this kind of very bullish signal. Again, that's a Nicholas Darvos sort of investment style. And with that, I'm going to wrap it up. I want to make sure that everybody understands Keltner channels. So if you need more help, go to Chart School, try and look at it there. Arthur's got a couple of books at the bottom referenced in there. I covered off Keltner Channels in my book. There's a couple of pages on that, but if you want to learn more about Keltner Channels, I would encourage you to look at that How to Make Money in Commodities, and then Linda Raschke's Modifications. Those are both great ideas.
Well, that was excellent. I know there were just a few questions in the chat room.
Okay.
Let's see. Greg said he has his channel set to 1. How do we change it, and what is the difference between 1 and another number, say 2?
I obviously didn't explain that very well. Okay, so the middle number in the Keltner channel is the number of ATRs, so the average true range. So you're going to take a 10-day period or a 10-week period, and it's going to say what's the range, and maybe it's 2% or whatever per day. If I take, so a 1 ATR is 2%, a 2 ATR would be 4%, and a 3 ATR would be 6%. So you're just making it much wider to get bigger and bigger extremes. And maybe you only want to trade huge extremes. And so with the Keltner channel, you can define the sensitivity of what you want to trade.
Excellent. Well, I think I know it enlightened me. I haven't really studied the Keltner channels, and I definitely enjoyed that presentation. Excellent teacher, as always.
Thanks.
All right. Well, let's see. We have a few minutes here, believe it or not, before our 10 and 10 to 1. So I was thinking I'd go ahead and we can talk very quickly about ChartCon, because that's coming up. So I will go ahead and put that in here. There we go.
Okay, and Aaron, where do people go to find that page on the website?
Absolutely. You want to go to stockcharts.com/ChartCon. There you go. And that will take you right here. So you don't have, that's all you need to know. We're talking about reducing risk in uncharted waters. It's going to be an online conference. However, there is an opportunity for you to come in person. And right now we're offering early bird pricing on that. I know we've had some questions about whether, the value to going to do this when, a lot of people talk about now that we have Stock Charts TV, we're going to have, we replay ChartCons. Well, that's this time around. Next time around, we'll have been doing Stock Charts TV for quite a while. I'm thinking we're going to have other information to be presenting. So you're taking a chance. And also, you'd have to wait 1.5 to 2 years before you could see the information. Highly recommend you check it out. We have some amazing speakers, and you can get all the information you want about that, as well as the agenda right there on the stockcharts.com/ChartCon page. So I know I'm pretty excited about it. I think we're still taking, yeah.
Aaron, is Alexander Elder one of those presenters?
Absolutely. I'm pretty sure he's in here.
He is.
Yep, yeah. There he is.
So if you've read Alexander Elder's Trading for a Living book, or come into my trading room and you want to understand more about the force indicator, more about those 3 color candles that I have on my 10-minute or on my 60-minute chart that I showed you earlier, all of that kind of stuff is Alexander Elder's work. Just as one example, he'll be there for the presentations. That guy alone has sold, I don't know how many hundreds of thousands of books on a trading idea, and having him in the markets or having him at this presentation discussing that, just as an example, is just huge.
Oh, absolutely. I'm a huge fan of him and his books. I felt a little bit, I think it was 4 years ago when we did the ChartCon, where he was there. I just remember running around, playing the fangirl, going around and taking pictures with all of these amazing guest speakers that we had, the people that I've read and, I'm huge fans of. Tom McClellan's going to be there, which I think is going to be amazing. He'll talk, I'm sure, about the McClellan oscillator summation indexes, as well as I know he's been predicting he was sort of predicting this bear market situation, actually, based on some of his data, commitment of traders data, I think is what he's been looking at. So lots of interesting information. And again, you don't have to go. I think that's kind of a benefit, really, because you can get all of this information, everything, by just going online. And we will have opportunities for you to go ahead and do so you can go ahead and do some social media with us. So you'll still be able to be involved in the conference, even if you are attending in an online way.
Okay, we should get into 10 and 10 because there was a rapid list or a huge list for selections today. And by the way, if everybody could fill out the survey about what we did well this week, that would be great because Aaron and I try to use that information to improve content in the future. So anything we did well, you could give us a check mark for. Anything that we didn't do well, would be good to highlight it. And one person mentioned that I didn't show how I had set up my chart and they were interested in that. So it's that kind of feedback that helps us remember to try and do that like today. So hopefully if there's some things that we can do better, that would be great. We'd appreciate if you could share that with us. So again, that's the button underneath. How'd we do? Click here to let us know what you thought of today's show.
Yes, excellent.
Okay, and Aaron said we were going to kick it off with MTOR, so let's get her done.
All right, here we go. I went ahead, of course, and already annotated it somewhat just to get us going here. I really like this chart. I see this breakout coming right now below that declining tops trend line. Let me actually make sure that I am looking at the most recent updated chart, but I believe I am. Look at the PMO. It's landed itself in oversold territory. It's now starting to turn up. You can see it is decelerating a little bit before getting up to that signal line, which could be a problem. But I'd be watching this little breakout from this declining trend, declining tops trend line, and then look for a move up to that overhead resistance area. I think it's positive that honestly it didn't have to go all the way down to test this area of support back here. Where you can see it was struggling to get above back last year and then popped up above and used as support. So we didn't even have to go down to test that. I think that is positive. So that is mTOR.
Okay, and we're going to go with IUSG for the second one.
Oh, okay, it's a new symbol. All right, an iShares ETF, core US growth, interesting one. So let me get into the annotate mode, which is the entire principle and reason we're here. So I'm going to go ahead and just use this support resistance line. I know we've got some areas where it poked down below. I suppose I could use that close back here from that low. And it's acting as very strong support right now. And we did get that bounce. I would look at this declining tops trend line. Let's see where that lines us up. And very similar, got a little bit of a poke above it yesterday, traded above, staying mostly above that declining tops trend line. I'd be a little bit concerned about that as far as, and then notice we had a 20-50-day EMA negative crossover. So this one may need to go down and test some of the support before we get that bounce, because we are sort of failing here at that declining tops trend line, which could be a bit of a problem. PMO is oversold, and if we do get that to turn up in a serious way, I think this could be good. But it looks like we might need a little bit more either consolidation or decline.
Okay. And we covered off NVIDIA and McDonald's yesterday, so we're going to cover off some different ones today. How about BOTZ, I think is the American way, and BOTZ is the Canadian way. So.
All right. So the global robotics AI. Interesting stuff. I actually did my master's thesis on using artificial intelligence to predict the market. It was pretty interesting. Obviously, I'm not a perfect predictor, so it didn't work as well as I'd hoped, but definitely interesting. Really strong area of support. We're testing it. It looks good. Not happy with the way the PMO is, in decline right now. And I'm going to go ahead and put an arrow on there. So not liking that. We're still not seeing an uptrend there. Volumes, it's hanging in there. I'd be watching. This is a really interesting area of support. I think you could set, again, if you wanted to give it a try, see if we can't get it to turn back up over here on that support line. You could set a stop fairly tight, just below maybe that 200-day EMA as a possibility. But this is something to look at as well. Now that I'm looking at this closely, is this double top. And I guess you could technically say it executed, Greg, because I know we went through this confirmation line here right at that neckline. So that would give me pause as well. And look at that. Oh my goodness, what an ugly scooter. That is not what you want to see heading into a bounce. So caution flag here. Alrighty, and that's number 3. I'm going to try and keep my count proper today.
Well, it wasn't helped by my counting.
Well,
Okay, so we're going to go with Hertz, HTZ.
All right. All right, let's take a peek at this. Really struggling at overhead resistance. I can see that just as it poked in here and I saw it approach. So yeah, this area is posing some very difficult overhead resistance. You can see that we did break down below this area when it was acting as somewhat as support. The one thing I am looking at here, though, that I think is interesting is a possible, and it's a little bit messy, but a possible reverse head and shoulders setting up here. It's a little bit messy, as I said, but we've got, if you look in the thumbnail for the PMO, we got that bull kiss. It came down, tried to fake out everybody, and then it started to head back up. I think that is always positive to see that. I can see that we are, let's go ahead. I'm going to make this red just to be different here. We are seeing the scooter, though, trending higher. So I think that's positive. So we have a pretty nice looking formation here, but we're struggling to get above that overhead resistance. Really need to see that. Be nice if we could get a 20, 50-day EMA positive crossover, because that would give you an intermediate term trend model buy signal as far as decision point is concerned. But I think this one has some interesting possibilities. And again, with a lot of these, and I think we talked about it yesterday, Greg, is the fact that, we had the pullback and now we're looking for that short-term bounce to come around and take advantage of. But that gives us the opportunity to set really tight stops right now, whereas before, not so much. So I think we are at a benefit if you want to try and get in here and play with the idea of a nice move coming up in the short term for the market in general. That's one way to do it. All right.
I also like on that one that the downsloping trend line on the PMO between the September, October high, the January high looks to me like it's breaking right now. And so I would take that break in momentum, especially as it heads above zero, as very bullish.
Yeah.
If that could start moving at all, I'd be very happy. I also like the fact that the scooter is going from below 25 above. So it's gone from junk to improving. And that change in momentum can attract the institutions. I just find that when the scooter's between 25 and 75, institutions will own it, but they don't really add to it. So it's as it comes out of that lower base and starts improving, then they start to add to things.
So definitely interesting chart. I think there's a lot of positives going on there.
Okay, we got Skechers Skx.
All right, this is a popular one. Get into annotate mode. All right, we're struggling here at overhead resistance. This is how I'm going to do my opaque auto support and resistance, or less, I should say. Here we go. So we can see through it. I really like doing that. The way to set that up is when you do a trend line, make sure that you include a color that is less opaque, and that way you're going to be able to see through it and choose that. But you need to have one chosen so that it shows up in your top 3, and that's how you can get your support resistance line to be see-through. And I like that because then I can really see where we've gotten these pokes above and below. I know you've got the green and the red. That's sort of the whole point of it. But I like to have it thick as well because, I find that support and resistance areas are usually in a zone to some degree. And so, for example, this would be the support area. So we've bounced off support. We're getting ready. We're tapping on overhead resistance. I do like the fact we have this PMO buy signal that is executing today. I think that's good news. If you want, we can draw a rectangle here and look at this lovely scooter hanging up in here with that nice high batting average. I think that's good. You've got OBV rising. The only thing I would say is I really would like to see that breakout before I get in. If you're holding it, I think there's, I'd keep holding it. But let's see here, get that.
I like it from the PMO bouncing off the zero line right now as it's trying to break out to new highs, going through. If it can, like you say, if it gets through $42 on a close,
Yeah,
I definitely want to own it, especially with the on-balance volume continuing to improve, even through this, 3 months of consolidation here. The OBV's continuing to drive higher.
exactly. Let's see.
Okay, let's get on with Shake It Up, Shake Shack.
All right. Okay, this was number, help me out here, 5?
5, yep.
5? Okay, so now we're coming on 6. All right.
And Shake
Okay.
Shack was one of the ones mentioned in Bruce's coverage yesterday quickly, but Bruce Fraser's Why Coffee and Work.
Yes. And I think someone asked about where those charts are posted. I believe I put them in the Market Watchers Live recap, but if I missed them, go ahead and let me know here. Well, this is kind of an interesting chart. Let's
Check it out on the multi-year first, because there's an important signal on the weekly.
There we go. Don't need it to be quite that long, so let's take off some of the end there. Update. There we go.
Okay, so that 2-year base that it broke out of is what makes this chart particularly Wyckofian right now.
Mm-hmm. There we go. Is that what you were looking at?
Yeah.
Okay. And again, if I want to make them opaque, click on one that I can see through here. All right, there we go. And yeah, the PMO on the weekly chart is turned up and is moving in the right direction somewhat here. It has been trending lower as price has been trending higher, but I'm not too concerned about that at this point. Looks nice on this weekly chart. I do like the fact we got that breakout. And now the question would be, where would you look for overhead resistance here?
At $100.
Yeah, I know, right up here. In the meantime, maybe.
Well, that's what Bruce talks about, doing
That's
that,
true.
taking the width of the base count and then multiplying it to go vertical. So that one's a great example of a weekly chart that was really well set up, and Twitter's much like that as well.
Yeah, look at the little bit of volume here. I'll mark here as it's rising, and we haven't even finished the day, and we're already moving higher than what we saw.
Yeah.
Before. Although this is a weekly chart.
Yeah, and last week was a short week. So anyway, wasn't a whole bunch of selling that came in while it was.
Okay, next one.
Go back in the last couple of weeks. Okay, we're going to go with Twitter was requested today, and I don't think we've done it this week. So
I don't think we have either. Looks like it's gotten hit as well with the. Let me fix this. That's a weekly chart. I want to get to them. There we go. Okay. It closed up that gap and it did bounce off of that area. So I think that's a positive. I need to annotate it though. Again, that's kind of the whole point here. So you can see that gap support actually in this regard. It closed the gap, but then it's heading right back up. I think that's a positive. Not particularly thrilled with the way this PMO is set up, but we are seeing a decent setup here with the scooter. It stays pretty much up in the top portion here. And we are in a very strong space at this point as far as the scooter is concerned. Technology in general, I think there's mixed reviews as to what's going on there. We're getting ready, though, to see negative PMO readings, and we haven't seen those since back here when we were basing, really between August and November, I would say. And so we got those negative readings, but we started back up out of it. So I would be watching the PMO very carefully, but I think we're in, this is a place that we need to bounce. And I keep talking about that as everybody's, well, is this a bear market? Is this, and I think you and I, Greg, talked about it earlier. It's, if it's going to do it, it needs to do it now. I mean, this is the place where you'd want to see it. And we are seeing a bounce at this point. But the question I think at this is, how much of a short-term bounce are we looking at?
Yeah. Okay. XLF. And the reason is because banks are reporting next week, I'm told.
Well, it looks like they're certainly set up to do well. Let's go ahead. And there's really clear support and resistance there. Very, very clear. Got the bounce here. It struggled to get above that 20-day EMA, and that does give me some pause. But, the PMO is really set up to do something here in terms of turning upward. And it's in that oversold territory where we saw before. So let's go ahead and we'll draw a horizontal line. I'll make it blue. So I like blue. No, that would be better if it were a little more opaque. Let's pick that blue. There we go. So you can see we've already come down and hit that previous low on the PMO. And this is the place, again, for it to turn up. I like that. Let's go ahead and do this. I like the OBV direction. That looks pretty nice.
Yeah.
So that's positive. All right. So I think we're in the position, to get that bounce. Oh, wait, I want to also note overhead resistance that I just saw right here. We've hit that. You can use that as resistance where we got the drop in the middle of the double top there. And I would use that as a possible area of overhead resistance that we hit and did turn down. It also matches up pretty well with the 20 and 50-day EMAs. So, we might have to go down and test the bottom of this little channel here, trading channel. So again, watch that PMO, wait and see if we really get to that turn on that. I think that there's a good possibility here, but we probably are going to have to go down and test that support level again.
Okay, and we need our token Canadian in there, so we're going to go with Canuck National Resources, called CNQ.TO, Canadian National Resources.
All righty. Excellent. Oh, nice breakout there. There we go. All righty, let's start with, I used to draw the horizontals here for the auto support. I didn't use auto support resistance. I would just use horizontal lines. But after watching Tom use it, and then I figured out how to make it see-through, and then I was sold. Love it. So great breakout yesterday. We are pulling back toward that point of the breakout. Not a surprise. I would expect that. Really healthy PMO here. I imagine this would have shown up on my scan earlier. And wow, what a nice setup there for that PMO. Didn't get much out of it, overall. I mean, we traded mostly sideways during that period of time, but we're seeing that acceleration on the PMO along with the breakout. So I think that is positive. OBV, we're starting to set a higher high here. So that's a good confirmation of this breakout move as well. Looks like we're going to get a 20-50-day EMA crossover, which would be a good thing as well. Let's make that purple. Why not? And oh, look at that scooter. I didn't even notice it. And it also looks really nice here. And let's just, again, we're going to use a few different settings here just so you can see what they look like. Do the green one. All right.
Okay, and there was a couple of requests for Visa and MasterCard. So let's just pick one. We're going to pick MasterCard, MA.
All righty. And that will be the last one. So, all righty. There we go. Okay, we've hit oversold territory, what has been important oversold territory. Let's go ahead. I'm going to use this as a marking tool. So again, you can get the range, not necessarily the actual line. So we're in that place where we do need to see that PMO turn up. It doesn't look like it's interested. It was, but also, with this great big decline today, this pullback, not a surprise to see the PMO sort of shifting downward again instead of upward. But you can see right now that 50-day EMA does appear to be giving us some support. I think we could also point out the fact, and let's use a green one here, that we've been seeing this particular stock in, it's been performing quite well. It's intermediate and long term. The strength is there. We had, let's see, I can draw this in really quick because I know this is the last one. I want to give us enough time to do everything. And we'll make that like that. So you can see with the OBV volume, it is starting to come back out of that declining trend. And to me, that could be a signal at this point that we would see a breakout here. That 50-day EMA really does need to hold, in my opinion, though, because other than, if it doesn't hold that area at about 170, if we start falling below the 50 and then come down and also have a problem with this area of support. But given the OBV, given the scooter being highly ranked, I think we'll probably find support there at that 170 level. And that would be it. That's number 10. All right, so as you can see, these were the symbols that I covered. And I will have, well, they're already in there right now because I just saved them to the Market Watchers live chart list. So you'll be able to find them there now or after the show. You can take a peek at those. With that, I'm going to actually pass it to you, Greg, to do a quick market update, and I'll get my sentiment charts together.
Sure. Okay, let's hit the refresh button on this homepage. So a couple of things to note that Aaron talked about earlier. Just we're down almost 400 on the Dow, so that's not a warm day in the spring just yet. The candle glance, I'm on my own settings here, so I'll get a little different candle glance view than Aaron has on the really close update. But I think the biggest point to make here is, again, the market is continuing to try and bottom. We do have down-sloping moving averages on the 50 period, but still upsloping on the 200. And if you ever want to just take an hour, go back and look at 2011, 2007, such an extreme, but go back and look at 2011, 2014, 2015, how the market topped, and just see how the moving averages behave. And, when the closer we get to a flat line on the moving averages, that's probably more of a risk. But the bigger issue here now is the 50-day has turned down, so it is going to behave as resistance on the way back up. So it's pretty important that if we're going to get through this, we start to get through these downturns. Volatility is still hovering around that 20 level, so that's plenty high. I had shown it to you on my top 10 chart, and it was just staying under that 100-period moving average on the 60-minute. So I'll call it finely balanced on the VIX as to whether or not it's ready to break down or not. Oil is moving back below the 50-period moving average, and for me, if oil's above the 50-period and the oil stocks are above the 50-period, I want to own it. If not, I don't. So that's a cautionary sign for me, especially closing out the Friday. And we talked about that momentum shift earlier, so that's important. But I think the bonds continue to roll over here. So what we're watching for again on all of this is just, does the market have enough enthusiasm to start kicking up to new highs? And obviously it takes considerable upthrust to do that. The second thing I would mention, one of the guys, Jason Gopfert, runs a website called Sentiment Trader. And on Sentiment Trader, he had over half of his bearish readings at extremes. And I mean, there's only 2 or 3 times in history he's gotten that bad. So anyway, really more important that he gets all of this noticing that significant level of bearish sentiment also suggests to be cautious if you're thinking it's all downhill from here. So anyway,
All right.
I'll turn it back to Erin and she can rock with her stuff.
Yes, we have some really interesting sentiment charts that I'm very excited to show you because a lot of times sentiment doesn't change too much. We've been looking at a lot of mixed messages, and at this point, I'm not seeing a mixed message here. So, you can give me some of your thoughts in the chat room, or Greg, certainly feel free to move on in. So one of the things that I follow is the put call ratio and the 10-day moving average. And what it tells us, whenever you get a very high reading, that means that investors are feeling bearish. That's actually bullish for the market because if you recall, sentiment is contrarian. So if everybody is on board in one direction or the other, that's generally when you're going to get the reversal in the market. So that's why I watch sentiment very closely because I want to know, how bearish or bullish are people feeling out there, not just through the VIX, but through some of these other places where you can find sentiment data. So anyway, the first thing, of course, that popped right out are these extraordinarily high put call ratio readings, the 10-day moving averages of such. And I've highlighted a few places where we've seen these kinds of readings on the CBOE put call ratio. And again, this means that we're seeing a very bearish sentiment. People are feeling very bearish right now. Well, not a surprise. We've come in to this decline. We're sort of shaking out right now with a bit of consolidation. And so consequently, we're seeing these very high readings. Typically, like I said, if investors are very bearish, that's going to be bullish for the market. So I've actually marked a few of the places where we've seen these high put call readings. And typically when you get the top, and we're topping right now on both of these, that's when you're going to see a move to the upside. So at this point, when I look at the put call ratios, I would say we're looking at some very bearish readings, and that would be bullish for the market. Let's go ahead and we're going to look at AAII, investor sentiment. This is the American Association of Individual Investors. They have a poll pretty much on the front page of their website. I believe anyone can take. And these are the results that they give us on Thursday evening, so we can see what we're looking at. And one of the things I think to note, it's pretty obvious, but I've moved it, I've done the arrows for you here on the chart. And we've lost a lot of bullish, a lot of people that are bullish in the polls, and we are increasing our bears. At this point, I would prefer to see a ratio that's much lower. This is a little bit too close to 1, meaning that there's an even amount of bulls and bears. If you get a preponderance of bears, you're going to end up with lower readings, and that's where we really want to see things go. Because again, typically when everybody is feeling particularly bearish, that's when you're going to see these reversals. And in a lot of cases, you can see that that's what we've come out of after getting some of these very low bull-bear ratios. But the main thing I wanted to point out is the fact that we are seeing this decline in bullish favor. People are feeling as less bullish and certainly more bearish. So I think that was interesting to look at. Name exposure. This is the National Association of Active Investment Managers. And these are the big guys with the big money, and they report how exposed they are to the market. And on the green side, that means they're, on the bullish side, you're not shorting. This is their exposure on the positive side. And currently right now it's reading at 55, 57. This is a low reading. It's not as low as we've seen. And I would prefer to see readings that low because you can see the burst of energy that comes out of some of these very low readings is pretty impressive. That's what I'd like to see. They're still low enough. This is showing me that we still are seeing, more of a bearish position right now because they have pulled back their exposure. I mean, look at the exposure level we saw at the end of 2017. This was one of the highest readings we've seen in years. Obviously, you can tell in this chart. I can't remember if it was the biggest I've seen since we were recording this information, but I suspect it might have been close. So at this point, we still are seeing some pullback on exposure, although when you look in the thumbnail, we did move up just a little bit more. And, that makes sense. We were all feeling a little bit better coming out of this, what looked to be a move back up for that week, but it didn't quite materialize the way we wanted. But that would
Aaron, can
explain
you
it.
draw a horizontal line at that 50% level?
I
Just
sure can. I will drag it down. All right. I'm not sure why this seems so blurry right now. 50%. There we go.
so in the last 2 years, we've never been this low. I guess briefly on
Yes.
the October swing.
Yes, where the exposure, that was right. I think that was somewhat before the election. We had that long pullback in exposure.
No, but
And
that's 2017, 2016,
right.
the election. Yeah.
Yeah.
So anyway, so since the beginning of 2016, this is as low as we've gotten.
Yeah.
But it's also the most volatility we've had too. So that would make for a reason
That's,
to knock it back. Yeah.
yeah. And I think it's, again, when you start seeing these low readings, that's, if they're pulling back their exposure, one, I do pay attention because they don't tend to always be contrarian. Like they do tend to kind of know what's going on, but they're making a lot of those big money moves. So I do consider it still contrarian, but only when we start getting into some of these more climactic or deeper readings.
The one thing I like about that is in 2014, we went down to 50%, then we bounced up in July, August. Then in September, you might remember we had the oil market started to go bearish on us. So we had that dip. And then we ran up and we tried to, go higher. And then the market actually topped out in May. So it was that kind of thrust down when oil was really starting to plummet that we got a kickback out of it. And the market still didn't top until after that.
Right. So these are the sort of things we're looking for right now as far as the exposure readings, and I think it is positive. We're looking at readings that are lower than we've seen, as you were saying, since early 2016. So that does tell us something. But we have been in this we were in a kind of a parabolic rally, so it makes sense that exposure would stay rather high during most of that. But as you were saying, with all the volatility we've seen, you can see that in the thumbnail right here. It's been a big mess here as far as the exposure levels, up, down, up, down. All righty, so I'm going to look at the Ridex assets as my final chart. And as a refresher, the Ridex doesn't actually own the funds anymore. Guggenheim owns the Ridex funds, but we keep that name Ridex ratio because that's the basket of funds that we were tracking. And we still track them, obviously, but they're not named, I don't think, the Ridex, whatever it is. So just so there's no confusion here. But there's a basket of stocks that Ridex did, and they were bear funds and bull funds. And we would track the assets in those areas because they reported that for us. And then they also reported the money market assets. So by watching this, we can see where is the money going. This isn't a poll. This isn't sitting there on AAII and saying, yep, I'm a bear. Yep, I'm a bull. This is telling us exactly what the money is actually doing right now. And I think that's a very interesting place to look right now because, I noted here what I put in here is we want to see that ratio hanging higher. That's when we usually are in a pretty nice situation. But the minute it starts to go into this lower area, we start to see some of this volatility and we're heading lower. But at the same time, low readings, again, you're starting to look at an extreme one way or the other. And in this case, we're looking at an inverted scale. So these readings are getting higher, meaning we're getting more in the numerator here, the bear and money market assets. So it's just something to pay attention to. But what I want to point out is what the assets are actually showing us right now. And you can see that I found it interesting that we did get a bit of a pullback this week on the bear funds, but overall we are still trending higher. What was really interesting was this huge push of assets into the money market arena. And again, I consider the money market arena as neutral. People are neutral. We talked about it yesterday, stuck in neutral. So what we're seeing here are people that are maybe not super bearish or super bullish, but are just, you know what, I'm going to take it out. I'm just going to let it go until I feel better about it one way or the other. And I think that does really explain the way our investors are feeling, and just our viewers in general as we see the chat room or various tweets that we follow and such. I think that makes a lot of sense. But look at the bull funds, pulling way back. People are getting, we're seeing less money in those bull sector funds. So between the fact that we're seeing an increase in money market, a decrease in the bullishness, the bear funds are pulling back slightly. But the big information here are the assets increasing in the money markets and decreasing in the bull and sector funds. So something to consider. And looks like we're about done. Let me go ahead and show you my summary slide of what I'm thinking here based on all of these charts. So if you recall, our put call ratio is extremely high, showing bearish sentiment, and that actually is very bullish for the market. That's what we want to see. AAII, we're getting a loss of bulls and an increase in bears. So again, we're seeing a lower bull-bear ratio, and that's bullish for the market. So again, people are very bearish. That's bullish for the market. As far as name, we're seeing low exposure readings, and that's definitely bullish for the market. We want to see that exposure pull back, and you'll start seeing that bearish feeling amongst the big money managers. The RIDEX ratio, we're seeing a market decrease in bull funds, extreme readings for the money market funds. I would say that is bullish for the market, although sitting there with a lot of neutral votes in that money market area, that does temper, I think, the bullishness coming through on that chart. But overall, I would say in conclusion that, sentiment is pretty much bearish across the board, and that is overall bullish for the market. So we're setting the stage, I would say, Greg, for getting this bottom to come in. And again, I think, as we've discussed, it's time. It better come in here soon, or we could be looking at something more serious.
Yeah, and I would say, in general, the market's going to try and rally here. Now, if it fails, that's probably a much bigger signal. But I fully expect some higher highs with the sentiment readings getting as low as they are just over a couple of weeks, and then we'll see. I know even today, looking at that 60-minute chart, we keep getting these buying tails on the bottom of the candles. So every time it dips, there's buyers stepping in here. So we'll see if it holds up and the momentum stays positive. But at this point, the one thing I would really like, though, is if everybody could take time to comment and let us know what you thought of this week's show or today's show, what we did well, what we didn't do well, so that all of us can get the content we want on air.
Yes,
Aaron,
absolutely.
I'll hand it back to you, and thanks for the opportunity to join your show this week.
Oh, it's been absolutely lovely to have you here. I think we make a great team. Of course we do. I think our analysis is very similar, and I think that it makes it kind of fun, certainly for us, and I hope for our viewers as well. So let's see what's coming up this week. Everything Stock Charts is going to be on Tuesday. Big news, of course, Tom will be back on Monday. We will welcome him with open arms. Wednesday, my dad, Carl Swenlin, will be in, likely to talk intermediate term information. So we've also got, see, he improved this. It is going to be my workshop on Friday. I haven't really decided what I'm going to do. I'll probably open it up to the audience to ask, to let me know what you'd like. So feel free to put that in the survey as well. I want to thank all of you for being with us today. Please remember to complete the survey as you exit. We'd love to get your feedback, as we said, and hear what you think of the show. As a quick reminder, Market Watchers Live airs 5 days a week, Monday through Fridays, from noon to 1:30 p.m. Eastern. That's when it's live, but we do replay it through the day. Have a great afternoon, everyone, and we'll see you back here tomorrow. Happy trading.